Hi students, in this video we will discuss about internal reconstruction. The another name is alteration of share capital. In corporate accounting, it is the very important chapter. In university point of view, we expecting 5 mark and 10 mark from this unit. Now we discuss about what is the meaning of reconstruction. Before we will discuss about why reconstruction process implemented in the company. In the three reason only the company implemented reconstruction scheme in the business. First reason, the company continuous years of losses. Next is the company's asset are overvalued, and third case, future the company must be promising cases. In three cases only the company implemented the reconstruction scheme. That is two type of reconstruction. One is the internal reconstruction, next is the external reconstruction. Now we discuss about what is internal reconstruction. Reconstruction means a company reorganize the value of asset, reassessment of the liability. That amount can be write off the losses suffered by the paid up value of shares. Okay. In the reconstruction scheme, there are various methods. That is alteration of share capital, variation of shareholder rights, reduction of share capital, compromising or arrangement, surrender of shares. Okay. Now we discuss about what is alteration of share capital. The alteration of share capital, they can be divided into two types. One is the subdivision and consolidation of shares. Next method is the conversion of stock or stock converted into shares. Okay. It means if any share capital value can be reduced by the shareholders. Next method is variation of shareholder right. It means if the shareholder, they can reduce the right of the if any rights can be reduced by the share. For example, the preference shareholder having 10% dividend received in every year, he can reduce the dividend percentage. It is the 8%. That is called the shareholder rights can be reduced or variation. And third method is the reduction of share capital. The shareholder, they have the capital value can be reduced. They can take the per share value can be reduced by the shareholder. In fourth method, compromising arrangement, that is called if a company debenture holder or creditor, they can give the compromising the some amount. For example, if the company to pay the debenture holder 1 lakh, the debenture holder accepting, okay, I will accept the value of, I will reduce the value of 80,000. The creditor value is 2 lakh. The creditor said, okay, you will give only 1,60,000. That is called compromising. Next, last method is the surrender of shares. It is called if any shareholder, they can surrender the share to the companies. In this video, we can discuss about the journal entry of first four method. Next videos, I will discuss about the surrender of shares. Okay. In this 5 method, the amount can be raised. They can maintain one of the account, that is called reconstruction account. What is reconstruction account? That is a new account opened by the company. What are the amount sacrificed by the shareholder, debentures, creditors? The amount can be transferred to the reconstruction account. That amount can be utilized to the fictitious expenses, intangible asset. They can utilize that amount. The balance amount availability, that amount transferred to the capital reserve account. That is the, in every sum we get the balance balance it is called capital reserve account. Now we discuss about what are the accounting treatment can be utilized in the internal reconstruction. Then journal entry made by the internal reconstruction and balance sheet. That is two important accounting treatment. Now we discuss about what are the journal entries. In the first method, the alteration of share capital, that is the first journal entry is the consolidation of shares. What is consolidation of shares? That is the company exiting share is the lower denomination can be new scheme, they can be increase the denomination of shares. Okay, the journal entry is share capital. For example, we say rupees 10 rupees the older value. Now the scheme reconstruction scheme the share capital value is changed is the 100 rupees. So we write the journal entry share capital account debtor, that is I will write in the bracket this is the old value 10 rupees. Share capital account debtor to share capital account, that is you write the new value of share capital. The second in journal entry is subdivision of shares. The subdivision of shares means the exiting share capital share value is higher value. That is in the previous balance sheet the share capital value per share is higher value. The new scheme, that is a reconstruction scheme, they can reduce the value, that is lower the value of denomination. That is the journal entry is share capital account. The bracket we write the exiting old share value 100 rupees. Share capital account debtor to share capital, that is new scheme of price is 10 rupees to share capital account. Third is second methods of internal reconstruction. Third journal entry for conversion of share into stock or vice versa. That means suppose some companies converting share into stock or some company converting stock into shares, depends on the reconstruction scheme. The journal entry is called equity share capital account debtor to equity capital account. Suppose the conversion of stock into shares means the opposite entry equity capital stock account debtor to equity share capital account. Next journal entry, if when uncalled capital reduce. In these cases the uncalled capital, we know about what is called capital and uncalled capital. Called capital means the company raised the company raising the payment of call from the shareholders. In some company we not receiving full share value. In between of the receiving of share price, the company can go to the internal reconstruction, means that is when uncalled capital reduce. That is share capital, the price is 100 rupees but new share capital is 60 rupees. So share capital account debtor to share capital 60 rupees, but in these cases we can include one of the account. So I will write the next entry. You can see for refunding surplus capital, that is share capital price is 100 rupees but now reducing the share capital is 60 rupees. The balance 40 rupees it can be transferred to shareholder account or bank account. Next cases, for reducing the rights of shareholder. Already I will tell about what are the reducing the right. If any percentage of dividend can reduce by some of the shareholders or some debenture holder can reduce the right of the company. In this case we write the journal entry share capital account debtor, that is in debit side we write the old price or old dividend rights, that is 8%, 9% of share dividend, or share capital means you write the old per share 100 shares at rupees 10 each, அப்ப 100 into 10 is the 1000 rupees. அப்ப 10 rupees is the old share. 2. Share capital account new. If suppose the 10 rupees share price can be reduced into 6 rupees, we write the new rupees 6. The balance 10 minus 6, balance is 4 rupees. It is to capital reduction account. Next journal entry, sacrificing by debenture holder or creditors. If any debenture holder or creditor can be sacrificed their amount, the balance amount we can transfer to capital reduction account. It is called the journal entry, debenture account debtor, creditors account debtor to capital reduction account. Next journal entry, in asset can be appreciated, that is asset value increased means the journal entry asset account debtor to capital reduction account, we write the amount, what amount raised by the previous amount, what are the amount can be raised by the previous amount. Next entry is for payment of contingent liability. In any liability paid by the company, that means we write the journal entry contingent liability account debtor to bank account. Next we discuss about last important capital reduction. This entry based on previous all entry. That is, say now we collect the amount, we settle the losses and asset, reducing the asset. That is called capital reduction account debtor to profit and loss account, to preliminary expenses account, to discount on issue of shares account, to goodwill account, to patent account, to reconstruction expenses account, to contingent liability paid account, to asset amount to be reduced value only, write this asset. Next the balance if any available, that is come the capital reserve account. Now we discuss about one of the sum. The following is the summarized balance sheet of X Limited as on 31st March 2012. Liability 12,000, 10% preference shares of 100 each 12 lakh, 24,000 equity shares of 100 each 24 lakh, 10% debenture 6 lakh, bank overdraft 6 lakh, sundry creditor 3 lakh. The total of liability is 51 lakh. See the asset side, goodwill 90,000, land and building 12 lakh, plant and machinery 18 lakh, stock 2 lakh 60,000, debtor 2 lakh 80,000, cash 30,000, P&L account 14 lakh, preliminary expenses 40,000. The total of asset side is 51 lakh. Now we can see carefully in the reconstruction scheme. On the above date, the company adopted the scheme of reconstruction. First point, the equity shares are to be reduced to shares of 10 each, fully paid. Now you go and see the what is the equity share price. See the balance sheet, the equity shares price value is 100 rupees. In the scheme, we reduced 40. Reduced to shares of 40 each. Next, and the preference shares to be reduced to fully paid shares of 75 each. Go and see the preference shares is 100 rupees. Now reduce 75 rupees. Next information, the debenture holder took over the stock and debtor in full satisfaction of their claim. See the debenture value 10% debenture 6 lakh. And the debenture holder took the stock values to 2,60,000, debtor value is 2,80,000. Now go the third information. The land and building to be appreciated by 30%. See the land and building value is 12 lakh. They can appreciate it. That means increasing the land and building values 30%. Next, plant and machinery to be depreciated. See the plant and machinery value is 18 lakh. The value is depreciated. Reduce the value is 30%. Fourth information, the fictitious and intangible asset are to be eliminated. That is called P&L account of 14 lakh and preliminary expenses 40,000 are to be eliminated. Fifth information, expenses of reconstruction amount to be 5,000. That is, in the scheme and the scheme of reconstruction, their expenses accrued, the value is 5,000 rupees. Give journal entry incorporating the above scheme of reconstruction and prepare the reconstructed balance sheet. Now we see the solution. First we see the journal entry. See the first journal entry, equity share capital account rupees 100. That is, see in balance sheet they are given in the 100 rupees. So equity share is 24,000 shares into 100, 24 lakh. In the scheme they can reduced by 40 rupees. To equity share is 40 rupees. 24,000 into 40, 9 lakh 60,000. The balance value 24 lakh minus 9 lakh 60,000. The 14 lakh 40,000 go to the capital reduction account. Go to the second entry, that is preference share capital entry. 10% preference share capital account rupees 100. Rupees 100 is the old value that is given in the balance sheet. Okay, 12,000 preference shares into 100, 12 lakh. To reduce the scheme value to 10% preference share capital, 75 rupees is the reconstruction scheme. That is additional information value given. 12 lakh into 75 rupees, 9 lakh. Subtract the 12 lakh minus 9 lakh, balance is 3 lakh is the capital reduction account. And third entry, that is debenture holder took over the stock and debtor. So that entry is 10% debenture account 6 lakh. The debenture holder took over the stock 2,60,000, debtor 2,80,000. So we will pay the debenture amount is 6 lakh. He took in the two asset value, that is 5,40,000 only. 2,60,000 plus 2,80,000, 5,40,000. Balance 60,000 is the capital reduction account. Fourth entry, appreciating of asset entry. In this sum, the land and building account can be 30% can be appreciated. See the land and building account. Land and building value is 12 lakh. 12 lakh into 30%, 3,60,000. So land and building account, debtor to capital reduction 3,60,000. Fifth entry is the expenses paid by the reconstruction. The entry is reconstruction expenses account, debtor to cash account, that is 5,000 rupees the value given in the information. The basis on 5 journal entry, we will write about the sixth entry. Capital reduction account 21,60,000. How will get the 21,60,000? Add 14,40,000, 3,60,000, 3,60,000. We added all the value, we got 21,60,000. Now we can write off the losses. The goodwill is 90,000. P&L account, that is 14 lakh. Plant and machinery account 5,40,000. How will get the 5,40,000? Plant and machinery is depreciating the value. Plant and machinery account 18 lakh into 30% is the 5,40,000. Next we pay the preliminary expenses, reconstruction expenses 5,000. So we can subtract 21,60,000 minus 90,000, 14 lakh, 5,40,000. 40,000, 5,000. The balance is the 85,000. That is called to capital reserve account. That is the balancing figure. Now journal entries, it is clear. Now we move on to the balance sheet. Okay. So balance sheet side, we can only available the share capital value. You see the notes, share capital, equity share capital, 24,000 equity shares of 40 each, that is 40 rupees the new scheme. That is, we can write the balance sheet after the reconstruction. So we take the value of reconstruction value. 24,000 equity shares of rupees 40 each, fully paid 9,60,000. Preference share capital 12,000, 10% preference shares of 75 each, fully paid 9 lakh, 18 lakh 60,000. Okay. Next is the capital reserve and surplus. Capital reserve is the 85,000. In last journal entry, we got the balancing figure is the 85,000. Next is the current liability. Trade payable. It is the creditor value given in the balance sheet in the sum. That is called 3 lakh, and short term borrowing, it is the bank overdraft. They are given in the sum balance in the balance sheet 6 lakh. So you can add 18 lakh 60,000 plus 85,000 plus 3 lakh plus 6 lakh 28 lakh 45,000. So we completed the equity and liability side. Now we go on the asset side. In the asset side, we can deal all the asset. Only they are land and building and plant and machinery, that is a fixed asset is and we have the cash at bank balance. In fixed asset, land and building have 12 lakh plus appreciate increased value is 3 lakh 60,000. 12 lakh plus 3 lakh 60,000 is called 15 lakh 60,000. Next is the plant and machinery. In plant and machinery values 18 lakh depreciated. Depreciated means less the value. 18 lakh minus 30% of 18 lakh, that is 5 lakh 40,000. 18 lakh minus 5 lakh 40,000. 12 lakh 60,000. You can add 15 lakh 60,000 plus 12 lakh 60,000, 28 lakh 20,000. Next is the current asset. Only current asset, cash at bank. Cash balance of is 30,000. We can give to the expenses of 5,000. Reconstruction expenses we can utilize 5,000. So 30,000 minus 5,000, 25,000. So both the asset side and liability side, the total is 28 lakh 45,000.